Hey everyone, me Kevin here. I have some quick and new insights regarding the housing market, and I'm worried that there might be a new trend that could end up hurting the real estate market. So let's get into this data and show you exactly some potential cracking that I'm seeing. So if you own real estate, you're thinking about selling, you're thinking about buying, you're a tenant and you want to buy, some of this might be good information for you, even if you're just thinking about when should I get my refinance. What are values going to do? So let's keep an eye on this and I'll teach you exactly what to do. So some of you might remember that back in March and April, I tracked the housing market on an almost weekly basis to determine whether or not we should buy real estate or wait for a crash. In fact, I reached out to many of you and said, hey, who's got data from different parts of the country? And we put this all on a spreadsheet and kind of compared the difference in trends week by week. Well, in April, based on what I was seeing, I recommended that it might be buy time because real estate wasn't getting hurt. We weren't seeing that damage in real estate in most areas of the country. In fact, we were seeing the opposite. We were seeing prices go up, probably because of interest rates and a lack of inventory, right? I mean, no surprise there. And so what I personally did is I started hunting for wedge deals like crazy and I shifted more money from stocks into real estate. Great. But what about now? What's this change that we're seeing now? Well, in order to see this, let's go ahead and pull up the spreadsheets. So just so you know, you can also see this spreadsheet in the Discord chat, which is, you can join for free. Link down below. It's metkevin.com/discord. You can join for free. Obviously, there are course member only sections, but you will see there is a link to this spreadsheet in the news section up at the top. And just want to quickly shout out Chad Blank for providing information from Hennepin. So if anybody's up in Hennepin, hit up Chad. Claudio from Orlando. We've got Ed for Broward, Palm Beach, Tampa. Tampa is Kelly. So Ed for Broward, Palm Beach, and Miami-Dade. And then I've been putting this data together for Ventura County, Orange, and Los Angeles. So we've kind of got the different coastlines in the middle of the U.S. Obviously, this doesn't represent everything, but we're trying to get an idea of changes, and then I'll show you how we could localize this to wherever it is that you are in the country and what you want to look for. So first, let's just look at May to September. Okay, so here's what we want to look for anytime we're looking at real estate data. First, we want to look at the median price, not the average price. It has to be the median price. Then we want to look at the number of properties sold relative to last month or the weeks prior. And then we want to look at how many days these properties are sitting on the market. And so green is generally a good thing. We want to see more properties sold and we want to see purchase prices going up and we want to see days on the market going down. Those all kind of feed into positive real estate indicators. And between May and September, all we had was green. Ventura County, well, almost all we had was green. Ventura County went up 18% in prices over that time. Orange County, 6.8%. LA, 15%. Hennepin, 4%. Days on the market went up a little bit though. Orlando, 4%. Broward County, 8%. Palm Beach, 8%. Tampa, 3%. And then Miami over here at also 3.35%. So a lot of bumps in prices with the number of properties sold between May and September skyrocketing. I mean, more than doubling in areas like California here, going up 50, 20, or 30 to 50% in parts of Florida. Absolutely large increases of the property selling and prices. So this is a good trend, right? Then when we look at March to September, we get pretty good numbers as well, good growth, but not as great as we had, when we just look at May through September. And part of that is really because once COVID hit, in March and April, a lot of people in the real estate market, well, some people were bailing. Some people were like, I just want to sell before this because this is going to be a big crash. So you had a lot of people trying to dump and you had a lot of buyers going, I don't know, I'm going to wait to see what happens. So that explains why when we look at March to September, the numbers aren't as good as when we look at May to September. But what's the change and what's kind of a little bit of a crack that we're seeing? Well, what we're seeing change here is here in August to September. Now, in fairness, September, we only have data, and this spreadsheet was put together using data from September 1st to September 16th. But I extrapolated those 16 days to a 30-day calendar, so we kind of know the rate at which properties are selling. Even still, even with that extrapolation of sort of like taking the beginning part of September and applying it to the second half of September, the numbers are starting to crack a little bit. And this is something to keep an eye on. Look at this. The number of properties sold is pretty much going down. And this could be because school has started. in many areas. But I mean, look at this. Some parts of Florida over here down in terms of volume sold in September compared to August. Way down. I mean, down 20 to 25%, 28% here in Miami. And what's more, in addition to less properties actually selling in September comparing to August, we actually are starting to have some prices fall. Look at this. Orange County is down 1%. Hennepin, Orlando, Broward down. Palm Beach, Ventura, LA, Miami, some of these areas up slightly. So you still got some growth in some areas. But it's starting to show you a little bit of softness coming in some markets. So how do we apply this to ourselves? You know, and originally we're thinking, okay, we're going to see the summer extend into the fall. This data doesn't say that so far. And so this is where we might want to start paying attention to our specific market and say, okay, what's our market doing? Are our prices starting to soften? And are the number of properties in our area starting to decline sales-wise? So here's what you can do for your area. Go to, I'll put this link down below, but it's basically Redfin's data center. And starting around April, they finally created this sort of week-by-week software that you can compare data to in your area. And it's not bad. It's actually pretty good. So here, for example, this is what it looks like. Redfin's COVID-19 weekly housing metrics. I personally recommend that you get rid of all the other lines and you just show 2020 because that's what really matters right now. And what we see here at the top line is we see new listings in all areas that Redfin tracks. We are starting to see that flatlining of new listings up here at the top and sort of possibly start towards the down in the amount of new listings coming up. So pay attention to the new home listings number, but then at the same time, the most important thing to watch, median sales price. Forget about cost per square foot or anything. This is classic. This is really what we've seen. Now, Redfin's data center isn't the fastest. It's usually about a couple weeks behind. But so far, this is consistent with what we've seen in our chart. We've seen a crazy jump in real estate prices from realistically May to September. In fact, there you could see that dip that I talked about between March and May. That's why we saw a little bit of that softness. May really saw that big growth. And so the way you want to use this is you want to pick an area. Let's just go ahead and pick an area here. Let's pick Boise City, Idaho. So let's click that in. Okay, great. So Boise City, Idaho, big jump in median sales prices here starting in June. Look at that. You did not get that bump starting in April or May. You actually had it starting in June. Why is this useful if you're buying a home? Well, it's extremely useful because if you're looking at other sales in your area, you got to compare to when that property sold. So for example, let's say you're buying a 3-bedroom, 2-bath in a, neighborhood XYZ or whatever, and it's 1,300 square feet. And you're like, well, here's a 1,300 square foot home that sold for $330,000. Why would I pay $360,000 for it now in September? Well, if you look at this chart here, you'll see that if we go from June or May to now, we see that bump exactly from 330 to 360. So you can actually adjust your comps based on these charts here. I like keeping it on the 4-week duration. It just keeps everything a little bit more smooth. Let's do another one here. Let's go down to, how about New Haven, Connecticut? Let's try that one. Okay, same sort of uptrend here, right? Let's see here. Granbury, Texas. What's this one? So this is much harder to read. This one actually tells us that we don't really have a consistent growth pattern due to COVID. There's almost no real noticeable appreciation here. It's just sort of the spiky up and down. In fact, let's try to flatten this and go to 12 weeks. Let's see what we've got going on. Okay, there we go. That helps us a little bit. That smoothed those lines out a little bit and gave us a little bit more of an idea that we do have a slight uptrend. From May, we were around 265, but in September, we fell a little bit. So now we're only at 270. This will help you scale your analysis when you're looking at buying real estate. Here, let's go back to Boise City and see on the 12-week, we actually don't see that September downtrend. So in Boise's case, let's go back to the 4-week. Look at this, we start seeing that downtrend or that flattening happening, right? Let's now go to 1 week. Let's see what happens. Oh, interesting. Look at that volatility there at the end. So this should really help you know how hot your market is. And the more hot your market is, the more you can expect to fight against multiple offers. So let's see if we could find here, Los Angeles. Yeah, pretty hot, right? So obviously, if I'm buying in Los Angeles, even the stuff that was selling in June is way less expensive than the stuff that's selling now. Look at this. In June, stuff was selling for about $660,000. Now it's selling for $720,000. That's like 10% more in 2 months. That's insane. That is an insane bump that you've got over here. Let's do another area here together. Let's do Seattle. Okay, what's Seattle got going on? Uptrend as well. We had a dip there in May. Potentially as we had some COVID spikes. Although remember, sales, these closings are going to be about 6 weeks behind. So if this dip was in May and we had that spike in COVID cases in Seattle maybe late March, that would approximately make sense in terms of this data. So yeah, same thing here. If I'm looking at comps from May or June, they're going to be somewhere around 5% lower than where those sales prices are now. So this is a really good tool for you to be able to keep track of this. I do think, though, we've got a little bit of softness and stalling coming here in September, and we want to pay attention to that because we don't want to go crazy into these multiple offer bidding wars unless we're comfortable that we're getting a good deal. That's something that I teach all the time, and I've analyzed hundreds of your deals in just the last few months here. In our real estate investing course, where we go live every day the market's open at 9 a.m. to answer your questions and analyze deals. One of the things we really have to do is we now have to, because this market is so volatile, compare what the comps are doing to what the multiple offers are and the competition we're up against. So if you're out there right now looking to buy, I've got 3 big tips. Number 1, check the data in your area and make sure you adjust the comps to what the data is saying in your area. Obviously the most recent comps are going to give you the most important data, and ignore the active listings. Number 2, be prepared to, if you are trying to buy, if you're in, let's say, that Boise City, Idaho area, maybe in a place like that where you don't really have that stalling yet. We had a little bit of a flattening, but then you had that pick up again. Maybe in areas like that, you've got to stay competitive. You got to shorten your contingencies or remove your rights to cancel. Maybe in other areas where you've got less of that extreme growth, you could be a little bit more competitive as a buyer. And of course, number 3, limit your speculative debt, because anytime we start seeing that kind of slowdown in that uptrend, you don't want to be caught kind of like buying right at the peak. And a lot of the prices we're seeing right now are relatively high. We've got a lot of peak prices in a lot of areas. So that's why I always say, just limit your speculative debt. Don't get into the hard money, 9, 10, 11% rates where you're paying 2 points for, a 12-month term or something like that. If you're going to buy something that you're willing to hold for the long term. A lot of people trying to flip right now, but you get into flipping right now and we start seeing more of kind of a slowdown in the market for whatever reason throughout the winter here, because we're not seeing that sort of resurgence of the summer market. If we are going to go into a normal winter, maybe hold back. In fact, here, look at this one. This is Hot Springs, Arizona. See, Hot Springs, Arizona here has a nice decline. We just went from median sales prices of about $205,000 to $160,000. I mean, that's a decline of 20%. So somebody who bought the last week of August, now compared to the middle of September, just burned 20%. So now, of course, there's a lot of the short-term volatility. So if I want to go to 4 weeks here, this is going to smooth it out. But you still see that downtrend here, So these are things to pay attention to, really. Because look, if you're in Hot Springs, Arizona, do you want to pay those peak prices right now? Or do you want to protect yourself and think, okay, well, maybe I want to be paying closer to $185 for that median home rather than going crazy and going over $200 like people were doing last month. So you see these little changes in data, very, very important. Just for giggles here, let's go ahead and put in all metro areas, and let's do a 1 week duration, and let's also throw on top here 2019. So let's compare, and we'll compare to 2018 as well. So as you can see, usually you get a softening when it comes time to August, September, October, when you look at the median sales prices, which is the top chart here. Notice the blue line and the gray line, they kind of soften there towards the middle of the year. That same expectation could happen to the red line, aka 2020 as well. So just know that when you're going out there and you're making offers on homes. So there you have it. Thank you so much for watching. Make sure to get 1 free stock with Webull. Deposit $100. They'll give you a free stock worth up to $1,600. Get life insurance in as little as 5 minutes. Protect yourself and your family. Check out the courses and the links down below. And folks, thank you so much for watching. We'll see you next time.